Ladies and gentlemen, good morning and welcome to the second in our series of 2013 webinars. Speaking to you from Edinburgh. It's been pretty cold the last couple of days, but I'm pleased to say that the snow is melting. It's Wednesday the 13th of March. My name is Chris Thomas. I'm a director of One Accounting, for those of you that don't know me. Just a little bit more about One Accounting and what it is that we do. We're an accounting firm based in Edinburgh. We work with owner-managed businesses, SMEs, who have a problem with their business not giving them the life that they want. So what we do is help them focus on what is important and help organize their finances for them. And we're big fans of online accounting software such as Free Agent and Xero, which we think are absolutely brilliant in helping business owners get organized and on top of things. And so that they feel more in control as well. All of this means that they have more fun, make more money. Simple recipe. Today's webinar is about preparing for P11d's. A lot of you are probably thinking, well, what is a P11d? Isn't this something that you as my accountant just need to deal with? Well, it's a statutory form required by HMRC, and like all HMRC forms, it's not up to you to just delegate all of this sort of thing to your accountant. It's important that you understand what's required yourself. A P11d is a form that ensures that tax and national insurance is going to be paid over to HMRC if someone receives something from a company or a sole trade business or a partnership other than salary. So for example, you have an employee that you want to reward and you decide to give them a company car. Maybe they'll need it for their job to scoot around the country. The company car might have a cash value of £5,000, and what this means is that the employee has to pay income tax just as if you paid them an extra £5,000 in salary. And you as the employer also have to pay employers Class 1 national insurance on the £5,000 as well. So the basic premise is if you give your employees anything that has the potential to be converted into cash, then HMRC want the employee to pay tax on the amount that they receive or the benefit in kind that they receive, and also for the employer to pay national insurance as well. There are two main things that need to be reported on a P11d. The first one is benefits in kind that are provided to an employee or a director, and we're just going to cover off a few of those benefits in kind in a second. The second item on the P11d, which is an area that people always get confused about, including the accountant, I must add, and this is expenses paid for by an employee which are then reimbursed by the business. So it sounds quite an innocent transaction. Somebody might buy some stationery or buy a meal for a prospect or a client and then have it reimbursed by the company. But this can actually create something that needs to be reported to HMRC. So what is classed as a benefit in kind? Well, there's a long list that's available on the HMRC website, but we're just going to cover a few of the basics here. So benefit in kind means that the individual, the employee, has some sort of benefit that they receive. So typically this might be a company car and fuel for that car. It could be interest on an overdrawn director's loan account. This is quite a technical area, but if it means that if you borrow money from your company as a director and don't pay interest on that, then potentially there's a benefit in kind there because you're receiving an interest-free loan. Private healthcare, so that could be Bupa or other healthcare providers are known. Bupa is obviously the main one that we're aware of in this country. You might provide memberships to your employees to incentivize them or to help them get fit, such as the golf club or the gym, and there's others as well. So for all these benefit in kinds, pay as you earn and national insurance is always going to be due. So what's going to fall under reimbursed expenses? Well, what this can basically mean is a series of expenditures that directors or employees actually pay for themselves and then claim back from the company. So that can include travel and accommodation. It can include entertainment, and that can be business entertainment or staff entertainment as well. Any fees or subscriptions that you pay to professional bodies. So if you're an accountant, you might pay subscriptions to the Chartered Institute of Management Accountants, or if you are in marketing, it might be CIPD. If you're a pilot, it may be something to do with the Pilots Union or the Pilots Association, and so forth. And there may be other reimbursed expenses that an employee will solely incur on the business's behalf that also need to be reported on the P11D. So this could just be something as basic as buying some stationery and then claiming it back from the company. Here's an example of what the P11D form actually looks like. It's a 2-page document, and it's something that we as accountants actually have bespoke software to help complete. So you can either complete it by hand. This is a form that still can be submitted by paper, but our preference is that you do this online. Far easier to complete the form and submit to HMRC as well. We're a few months away from the deadlines, but it's important just to point out what these are. So deadline number 1 is for the 6th of July, and this is for submission. I put online submission there, but it can be paper as well, of the P11D forms to HMRC. Now, we mentioned Class 1A national insurance, so this is basically the employer's portion of the national insurance at 13.8%. And you've got 2 deadlines there. One is the 19th of July if you pop the cheque in the post, and the second is the 22nd of July if you actually pay electronically via online banking. Okay, for those of you that are still awake, you're probably thinking, well, why should I be bothered by all of this? Well, the reason that you should be bothered is that if you get it wrong, there are absolutely huge penalties, and these are actually larger than penalties that we're seeing for self-assessment defaults or corporation tax, late filings, etc. So the actual penalties, if you're late or you don't submit a form that you're supposed to, a P11D form that you're supposed to, is £300 per P11D return plus £60 a day. So if you have a business, say with 4 employees, that's £1,200 immediately that you owe in fines. And then for every day that you're actually late, it can be another £60 as well. As you can probably gather from the sort of things that need to be reported on the P11D, it could be easy actually to make errors. Either you might forget to put something on the P11D, or it could potentially go on as the wrong value. So there's a series of penalties which get added on. It can be at the lower end of the scale. If it's careless action that caused the error, it can be 30% of the tax that's due. But at the other end of the scale, if you deliberately make an error or something's concealed along the line, then it can be up to 100% of the actual tax that's due, which then needs to be paid over to HMRC, in addition to the £300 per return. So it's one of these things that's really important that you get right. How do I know, you as the employer, you as the client, if I need to submit P11Ds? Well, we just provide a little table here to help you through it. So the easiest one, if you're a sole trader or a partnership and you don't actually have any employees, it's just you, then you won't have to submit one. Because as a sole trader, you're not an employee of your own business. It's actually you are the business. So no employees means that a P11D doesn't need to be submitted. If you're trading as a limited company, or perhaps a sole trade or a partnership, and you have employees, you need to look at whether you're actually providing them with benefits in kind. So it could be the company car or the private health. It could be a membership, a long list of things that you might be able to be actually providing with. If you are providing any benefits in kind, then yes, you will need to submit P11Ds on behalf of your employees. If you're keeping a tight belt on things and you don't actually provide any benefits in kind, but your employees submit expense claims which you then reimburse as the employer, you will have to submit the P11Ds unless you can get something called a dispensation. In terms of notifying HMRC, it's not something that will come out to you automatically, so you need to notify HMRC that you actually have to complete a P11D. And the way that that's done is that when the P35, which is the employer's end of year return, which we're just about to get started on those, the deadline of which is the 19th of May, there's a little tick box there to tell the taxman whether you're actually going to submit a P11D as well. So for the clients that we're currently working with, there's a lot of information we hold already. So where there are benefits in kind, we know that they exist because we've had the conversation with the client already. And also from previous years where they may have expenses that they've reimbursed, then we've got a little flag to say it's likely that that client will need to submit P11Ds unless they've had a dispensation. So for any clients or any potential clients out there, the preparation of P11Ds is subject to a separate fee. Quite a bit of work involved. We talked about reimbursed expenses. You can avoid having to pay national insurance and pay as you earn on these if you follow up. It's a bit complicated. We submit the P11D and then you need to submit a Section 336 claim to HMRC, which is basically a letter. So the taxman doesn't actually make it doesn't make it easy for you, because there's a two-stage approach. Press the button, file the P11D, and then send in a separate letter. It's quite a clunky way of doing things. Or the best way is that we apply for a dispensation for you before the tax year end on the 5th of April. If HMRC actually approve the dispensation application, then this removes the need to report reimbursed expenses as long as HMRC are happy to issue that dispensation. So the good news is all you would need to do from then on is list any benefits in kind that you provide to your employees. If, as an employer, you don't provide any benefits in kind to your employees and you have the dispensation, then the good news is that no further filings are actually required. What we found with our own client base at this time of year is that the most common issues we face are actually mobile phone and home office landline charges. So we see a lot of startup businesses who quite innocently just, they might move from employment into self-employment, and they just take their existing mobile phone and use it in the business. So if you actually set these up properly, there's no pay-as-you-earn or national insurance charge, but potentially you need to actually, say you pay, £500 for the mobile phone in the year. Potentially you need to add that onto the payroll if you're a director of your own company, and pay as you earn and national insurance on that. The best thing that you can do with mobile phones, and even if you've got an existing number, you should be able to speak to your mobile phone contract provider and get it switched. The best thing to do is to get it in the name of the company. If it's in the name of you personally, then in theory the company is actually providing you with a phone, and that's a benefit in kind, because the taxman takes the view that if you have a phone, there is some element of private usage. So the best thing to do is to get any mobile phone contract switched and then set up in the name of the company. So just to finish off, there's probably a 3-step guideline here that we have to make the whole process easy. Firstly, set up any mobile phones or home office if you run a home office and use a phone there. Set the landlines up correctly, set the mobile phone contracts up correctly in the name of the company. If you're in the habit of reimbursing your employees for their expenses, whether it's travel, entertainment, or just simple old stationery, apply for a dispensation and you can remove the headache of having to prepare and submit P11Ds in any case. And step 3 is to track accurately the cost for benefits in kind to minimize administration costs on information gathering. So it can take quite a long time if you don't have a dispensation in place, or say you provide company cars, to actually gather all of the information together in order to help your accountant submit the P11D on your behalf, or if you choose to do it yourself, it's still quite a lengthy process to gather all of that information. So there's 3 steps there that you can follow to make life easier. So that's us done for the day. That was an introduction to P11Ds. There's webinars throughout the year, and the next webinar that One Accounting are presenting is in a few weeks' time on the 20th of March at 10:30. And that is an introduction to VAT. So if you like what you've seen, please do get in touch. There's a couple of ways that you can do that. You can pick up the old telephone, and we're on 01313386150 in Edinburgh. You can email us at info@oneaccounting.co.uk, quoting reference P11D web. And finally, you can follow us on Twitter at One Accounting. So it's a pleasure to speak to you today. My name's Chris Thomas. It's One Accounting. That was an introduction to P11Ds, and have a good day. Thank you.